People think turning 10,000 pounds into 1 million pounds requires luck, genius, or some secret formula known only to the wealthy. They're wrong. What it requires is something far more painful: patience. The kind of patience most human beings simply cannot tolerate. I'm going to show you the arithmetic. It's devastatingly simple. So simple, in fact, that you'll be insulted by how boring it is. And that's exactly why most people never do it. They'd rather chase excitement than build wealth. They'd rather feel clever than become rich. Let me be clear from the start. This isn't about beating the market. It's not about finding the next Tesla or timing the perfect entry point. It's about behaving sensibly for long enough that compound interest does what human effort never could: multiply your capital while you sleep. The path from 10,000 pounds to 1 million pounds is paved with discipline, not brilliance; with restraint, not risk-taking; with decades of doing the boring, obvious thing while everyone around you does something stupid. I built my fortune during the Great Depression, watching supposedly smart people destroy themselves, chasing returns they didn't understand. I learned early that survival matters more than genius, that avoiding stupidity compounds faster than chasing brilliance. So if you've got 10,000 pounds and you want to turn it into 1 million, prepare yourself. Because what I'm about to tell you won't make you feel smart. It won't give you dopamine. It will simply work if you can stand the boredom long enough to let it. The arithmetic is simple. The execution is brutal. And the difference between those who succeed and those who fail isn't intelligence. It's temperament. Let's begin. Let's start with the numbers because they don't lie, even when we desperately want them to. If you invest 10,000 pounds and compound it at 10% annually for 50 years, you'll have roughly 1.17 million pounds. That's not magic, that's arithmetic. 50 years of not touching your money, not panicking during downturns, not chasing the next shiny object. Most people hear 50 years and immediately check out. They want it faster. They want the million in 10 years, or 5, or ideally next Tuesday. That's why they'll never get there. But let's say you're not content to wait half a century. Fair enough. Let's look at other scenarios. If you can achieve 12% annually, and that's difficult but not impossible if you invest in quality businesses and hold them, you'll reach 1 million pounds in 41 years. If you can somehow manage 15% annually, which Warren and I did for decades, you'll get there in 33 years. Notice something. Even at extraordinary rates of return, we're still talking about decades. There is no shortcut. Compounding is a slow grind that eventually becomes an avalanche, but only if you survive the grind without doing something stupid. Now, here's where most people sabotage themselves. They look at these numbers and think, 10,000 pounds isn't enough? I need to start with more. Or they think, I need higher returns. 10% is too slow. Both thoughts lead to ruin, because the moment you start chasing higher returns, you start taking risks you don't understand. You leverage yourself. You speculate. You convince yourself that this time is different. And then when reality arrives, you lose not just your gains, but your original capital. I watched this pattern destroy entire fortunes during my lifetime. Brilliant men, well-educated, financially literate, who couldn't stand the idea of earning only 10% when their neighbor was bragging about 30%. So they took absurd risks and ended up with nothing. The arithmetic is simple. Steady compounding at reasonable rates, never interrupted by catastrophic losses, will make you rich. But human psychology makes us crave speed over certainty, excitement over endurance. Here's the truth nobody wants to hear. You don't need brilliant returns. You need not to blow up. If you can achieve modest returns and avoid disaster for long enough, time will do the heavy lifting. Let me put it another way. A 10% return for 50 years turns 10,000 pounds into over 1 million. But if you chase 20% returns and blow up twice along the way, losing half your capital each time, you'll end up with less than someone who simply sat still earning 8%. The math favors patience, not brilliance. It rewards survival, not speculation. And yet, every generation insists on learning this lesson the expensive way. So before we go any further, write this down. The path from £10,000 to £1 million is paved with reasonable returns, sustained over unreasonable periods of time. If you can't accept that, you're not ready to invest. You're just gambling with a spreadsheet. The biggest obstacle between your £10,000 and your £1 million isn't the market. It's not inflation, interest rates, or economic crashes. It's you. Specifically, it's your inability to sit still while compounding does its quiet work. Human beings are not wired for long-term thinking. We're wired for immediate gratification. We want to feel productive, to see progress, to do something, and in investing, that impulse is fatal. I've spent nearly a century watching people destroy their financial futures, not because they were unlucky or unintelligent, but because they couldn't tolerate boredom. They had to tinker. They had to trade. They had to feel like they were actively managing their investments. Let me tell you what active management usually means. Interrupting compounding with your own stupidity. Every time you sell because you're nervous, you're restarting the clock on compounding. Every time you chase a hot tip or a fashionable sector, you're gambling that you're smarter than the collective wisdom of millions of investors. You're not. The most dangerous phrase in investing is "this time is different." It never is. Human nature doesn't change. Greed inflates bubbles, fear creates crashes, and impatience destroys fortunes. These patterns have repeated themselves since the first stock exchange opened, and they'll repeat until the last one closes. Warren and I made our fortunes not by being active, but by being patient. We found good businesses, bought them at reasonable prices, and then did nothing. For years, sometimes decades. While others were busy trading, we were busy compounding. The discipline of inaction is harder than it sounds. You'll watch your holdings fluctuate. Some years they'll be up 30%, other years down 20%. Your neighbor will brag about his returns. Financial news will scream that you're missing opportunities. And every fiber of your being will want to do something. Don't. Because here's what the arithmetic tells us. The more you trade, the poorer you become. Every transaction has costs, taxes, fees, the bid-ask spread. But more importantly, every transaction is a vote of no confidence in your own judgment. If you bought a business because you believed in its fundamentals, why are you selling it 6 months later? The answer usually is emotion. Fear when prices drop, greed when they rise. And emotion is the most expensive luxury in investing. I learned this lesson during the 1930s. I watched men who were far smarter than me lose everything. Because they couldn't control their emotions. They borrowed during booms and panicked during busts. They confused a bull market with genius and a bear market with apocalypse. Meanwhile, the quiet savers who simply kept buying quality businesses at reasonable prices and holding them through chaos ended up wealthy. Not because they were brilliant, but because they could sit still. If you want to turn £10,000 into £1 million, your first job is not to find the perfect investment. It's to master yourself. To develop the temperament that can watch your portfolio drop 30% without selling. To see your neighbor double his money on some speculative nonsense without feeling envy. To endure years where nothing exciting happens, knowing that beneath the surface, compounding is working. Most people can't do this. They'll sabotage themselves halfway to their goal. They'll get bored during bull markets and terrified during bear markets. They'll act when they should wait and wait when they should act. If you can avoid being your own worst enemy, you're already ahead of 90% of investors. The rest is just arithmetic and time. Now that we've established what not to do, which is most things, let's talk about what you should do with your £10,000. First principle, invest in businesses you understand. Not stocks, not tickers, not momentum plays. Businesses. Companies that make products, serve customers, and generate profits you can comprehend. If you can't explain in simple terms how a company makes money, you have no business owning it. I don't care how exciting it sounds, how many analysts recommend it, or how much it's risen this year. If you don't understand the business model, walk away. Warren and I built Berkshire Hathaway by buying boring businesses. Insurance, candy, furniture, newspapers. Nothing glamorous. Nothing that would impress anyone at a cocktail party. But we understood how they made money. We believed they'd keep making it. and we were willing to hold them forever. You don't need to find the next Apple or Amazon. You need to find solid, profitable businesses selling at reasonable prices. Then you need to hold them long enough for compounding to work. Here's a simple framework. Look for companies with durable competitive advantages, brands that customers trust, products that people need regardless of economic conditions, management teams that allocate capital sensibly, and prices that don't require heroic assumptions about the future. In the UK, that might mean consumer staples like Unilever or Diageo. It might mean pharmaceutical companies with proven drugs. It might mean well-run financial institutions. The specific names don't matter as much as the characteristics: durability, profitability, reasonable valuation. And once you've bought them, here's the hard part. Do nothing. Let the businesses compound. Let management reinvest profits. Let time work. Now, should you put all £10,000 into one company? Number. That's not prudence. That's recklessness. But you also don't need 50 holdings. Warren and I have always believed that diversification is protection against ignorance. If you understand what you own, 10 good businesses are plenty. So take your £10,000 and divide it among 5 to 10 quality companies. Buy them, hold them, ignore the noise. But here's something most people miss. You can't just invest £10,000 once and walk away for 50 years. You need to keep adding to it. Because while £10,000 compounding at 10% will eventually become $1 million, it takes half a century. But if you add just £2,000 every year to that initial £10,000, you'll reach $1 million in 32 years at the same return. This is where discipline truly matters. Can you save £2,000 a year? For most people in the UK, that's roughly £160 per month. Not nothing, but not impossible. It means saying no to meals out, unnecessary subscriptions, the car you don't need, the holiday you can't afford. It means living below your means year after year after year. While your neighbors finance lifestyles they can't sustain, you're building capital that will eventually buy your freedom. The arithmetic is brutal but fair. The more you can invest and the longer you can let it compound, the richer you'll become. There's no way around it. You can't hack compound interest. You can only submit to it. Should you ever sell? Only if the fundamental reason you bought the business changes, if management becomes incompetent, if the competitive advantage erodes, if the valuation becomes absurd. Otherwise, sit tight. I've held investments for decades, not because I forgot about them, but because they kept doing exactly what I expected them to do: make money, reinvest it sensibly, and compound my capital. The world will tell you to rebalance, to take profits, to rotate sectors, to stay active. Ignore all of it. Activity is the enemy of returns. The more you do, the less you'll have. One more thing: avoid debt. Never borrow money to invest. Never use margin. Never leverage your portfolio. Debt is compounding working against you. It can turn a mild setback into a catastrophe. And catastrophes are what prevent you from reaching that £1 million. The strategy is simple. Buy quality businesses at reasonable prices. Hold them indefinitely. Add capital whenever possible, and avoid doing anything stupid. That's it. No genius required. Just patience and discipline. Let me tell you about the mistakes that will prevent your £10,000 from ever becoming £1 million. These aren't theoretical. I've watched people make them for nearly a century. Trap 1. Chasing returns. The moment you start comparing your returns to someone else's, you've lost. Your neighbor will always have a story about how he doubled his money on some cryptocurrency or penny stock. He'll conveniently forget to mention the 3 other times he lost everything. Envy is poison to compounding. The intelligent investor doesn't compete with anyone. He simply avoids stupidity long enough for arithmetic to work. Trap 2. Overtrading. Every time you buy or sell, you're paying transaction costs and taxes. More importantly, you're betting that your timing is better than staying invested. It almost never is. I've known investors who turned £100,000 into £1 million, then back into £100,000, all through excessive trading. They couldn't sit still. They had to do something. And that something destroyed them. Trap 3. Leverage. Borrowing money to invest feels like a shortcut. It's actually a trapdoor. When markets rise, leverage amplifies your gains, and you feel like a genius. When markets fall, leverage amplifies your losses and destroys your capital. I watched the Great Depression wipe out men who were over-leveraged. They thought they'd found the secret to getting rich quickly. They found the secret to going broke permanently. Trap 4. Panic selling. Markets will crash, not might. Will. It's not a question of if, but when. And when they do, every instinct you have will scream at you to sell. Don't. The crashes are where wealth is transferred from the emotional to the rational. If you've bought quality businesses at reasonable prices, a market crash is irrelevant. The businesses keep operating. They keep earning. And eventually, the market recognizes their value again. But if you sell during the panic, you lock in losses and miss the recovery. You'll buy back in later at higher prices, having accomplished nothing except making yourself poorer. Trap 5. Hot tips in fashionable sectors. Someone will always have a sure thing. A friend of a friend who works at a company with inside information. A sector that's about to explode. A trend you can't afford to miss. Ignore all of it. Hot tips are how stupid people separate fools from their money. If an investment opportunity sounds too good to be true, it is. If everyone is talking about it, you're already too late. Trap 6. Believing you're special. The biggest trap of all is thinking the rules don't apply to you. That you're smarter, quicker, more informed than everyone else. That you can time markets, pick winners, and get rich quickly. You can't. Nobody can. Not consistently. Not reliably. The moment you believe you're special is the moment you start taking risks that will eventually destroy you. I've met thousands of investors in my lifetime. The successful ones all had one thing in common: humility. They knew what they didn't know. They stayed within their circle of competence. They respected the power of compounding and the danger of overconfidence. The failures? They thought they were geniuses. They took risks they didn't understand. They chased returns instead of avoiding losses. And they ended up with nothing. If you want your 10,000 pounds to become 1 million pounds, you need to avoid these traps. Not once. Not most of the time. Always. Because one catastrophic mistake can undo decades of patient compounding. The path to wealth is littered with people who were right 90% of the time, but wrong once in a way that destroyed them. Don't be one of them. Turning 10,000 pounds into 1 million pounds isn't primarily a financial challenge. It's a psychological one. The numbers work. The strategy is simple. What fails is the human mind. Let me tell you about the emotions that will sabotage you if you don't master them. Fear. Fear is the most natural emotion in investing. It's also the most expensive. When markets crash, fear whispers that this time is different, that the world is ending, that you need to sell before you lose everything. I've lived through the Great Depression, multiple recessions, the dot-com crash, the financial crisis of 2008. Every single time, fear convinced people to sell at the bottom. And every single time, those who stayed rational were rewarded. Fear doesn't predict the future, it only amplifies the present. The cure for fear isn't courage, it's preparation. If you've invested in quality businesses with durable competitive advantages, bought at reasonable prices, you have nothing to fear from temporary market volatility. Volatility is not risk. Volatility is the price of admission for superior long-term returns. If you can't stomach watching your portfolio fluctuate, you don't deserve the returns that come from equity investing. Greed. Greed disguises itself as ambition. It whispers that 10% isn't enough, that you could be getting 20%, 30%, 50% if you just took a few more risks, if you just leveraged a bit, if you just bet bigger. Greed has destroyed more fortunes than stupidity ever did, because greed makes intelligent people do unintelligent things. The cure for greed is gratitude. Be grateful that you can compound at 10% annually when most of the world can't. Be grateful that you understand these principles when most people never will. Be grateful that time is on your side. Impatience. This is the killer. Impatience makes you trade when you should hold. It makes you chase fads when you should stick to quality. It makes you want results in years when success takes decades. Compounding is slow at first, painfully slow. Your 10,000 pounds becomes 11,000 pounds, then 12,100 pounds, then 13,310 pounds. After 3 years of discipline, you're up 3,310 pounds. Meanwhile, your idiot neighbor claims to have doubled his money on GameStop or Dogecoin. This is where most people break. They can't stand the slow grind. They want excitement, not results. So they abandon the strategy that works for the gamble that doesn't. The cure for impatience is understanding the mathematics of compounding. In year 1, your 10,000 pounds grows by 1,000 pounds. In year 30, that same 10% return generates 15,863 pounds. Same percentage, vastly different outcome. But you only get to year 30 if you survive years 1 through 29 without doing something stupid. Envy. Someone will always be getting richer faster than you. It's guaranteed. There will always be a story about someone who turned 1,000 pounds into $1 million overnight on cryptocurrency or options or some speculative nonsense. Ignore them. They're statistical outliers, not role models. For every person who got lucky, 10,000 lost everything. You just don't hear their stories because failure doesn't make headlines. Envy makes you compare yourself to others when you should be comparing yourself to your own goals. Your goal isn't to beat your neighbor. It's to turn 10,000 pounds into 1 million pounds. Stay focused on that. Ego. Ego tells you you're smarter than the market, that you can time the tops and bottoms, that you figured out something everyone else missed. Ego makes you overtrade, overconcentrate, and overleverage. I've never met a successful investor with a big ego. The successful ones are humble. They know they'll be wrong often. They build portfolios that can survive their own mistakes. They focus on not losing money first, making money second. The cure for ego is humility. Admit what you don't know. Stay within your circle of competence. Accept that you can't control outcomes, only behavior. Here's the truth. Investing isn't about being smart. It's about being sane. The intelligent investor isn't the one with the highest IQ. He's the one who can remain rational when everyone else is losing their minds. If you can master your psychology, if you can defeat fear, greed, impatience, envy, and ego, the path from 10,000 pounds to 1 million pounds is just arithmetic and time. But if you can't control your emotions, no strategy will save you. The battle isn't in the market, it's in the mirror. Let me tell you about the years that will make or break your journey from 10,000 pounds to 1 million pounds. Years 1 to 10. The boring years. The first decade is where most people quit. Your 10,000 pounds becomes 25,937 pounds if you compound at 10% annually. You've more than doubled your money, and yet it still feels like nothing. You're nowhere near a million. The progress feels invisible. This is by design. Compounding is exponential, not linear. The early years are about building the foundation. You're not going to see dramatic results. You're going to see small, steady growth that tests your patience. Most people can't stand it. They look at 10 years of discipline and see 15,937 pounds in gains. They think, this isn't working. So they abandon the strategy. They trade. They speculate. They start over. If you can survive the first 10 years without losing your mind, you're already in the minority. Years 11 to 20, the awakening. Something changes in the second decade. Your 25,937 pounds becomes 67,275 pounds. You've added over 40,000 pounds in a decade where you only added 15,937 pounds in the previous one. Same 10% return, vastly different outcome. This is when you start to feel the power of compounding. The snowball is growing. Each year adds more than entire years did in the beginning. You're not rich yet, but you can see it's working. This is also where the second wave of dropouts occurs. People see their balance growing and get confident. They think they've figured it out, so they start taking risks. Leverage here, a speculative bet there. They interrupt the compounding just as it's gaining momentum. Don't be one of them. Stay boring. Stay disciplined. The strategy that got you through 20 years will get you through 30. Years 21 to 30, the acceleration. Your 67,275 pounds becomes 174,494 pounds. You've added over 100,000 pounds in a single decade. The same patient, boring strategy that felt futile in year 5 is now generating life-changing wealth. This is when people start noticing. They ask how you did it, and when you tell them, buy quality, hold forever, compound patiently, they don't believe you. They think you're hiding something. There must be a secret, a trick, something more sophisticated than just waiting. There isn't. This is what 3 decades of not doing anything stupid looks like. Years 31 to 40, the reward. Your 174,494 pounds becomes 452,593 pounds. You're nearly halfway to a million, and the numbers are accelerating fast now. Each year generates more wealth than entire decades did at the beginning. This is where the math becomes undeniable. You're not lucky. You're not a genius. You just refuse to self-destruct for 40 years. Years 41 to 50, the million. Your 452,593 pounds becomes 1,173,909 pounds. You've crossed the million-pound threshold. Not through speculation, not through luck, through arithmetic and patience. Here's what most people don't understand. The majority of your wealth was created in the final decade. 700,000 pounds of your million came in years 40 through 50. All the boring, frustrating years before were necessary, but the real magic happened at the end. This is why starting early matters so much, and why staying invested matters even more. If you'd quit in year 30, you'd have left 800,000 pounds on the table. If you'd quit in year 40, you'd have missed 700,000 pounds. The years that matter most are the ones that come after everyone else has given up. That's when compounding reveals its true power. But you only get there by surviving every year before it. Most people never see year 50. They sabotage themselves in year 5 or 15 or 35. They get bored, scared, greedy, or impatient. They interrupt the process and restart the clock. Don't be most people. I've shown you the path from 10,000 pounds to 1 million pounds. But let me be honest about the obstacles that can derail you, even if you do everything right. Inflation. 1 million pounds in 50 years won't buy what 1 million pounds buys today. Inflation erodes purchasing power silently and relentlessly. At 3% inflation annually, that million pounds will have the purchasing power of roughly 228,000 pounds in today's money. Does that mean the strategy doesn't work? Number. It means you need to think in real terms, not nominal ones. Your 10% nominal return becomes 7% real return after inflation. That's still enough to build meaningful wealth. But you need to understand what you're actually getting. The cure for inflation is equity ownership. Businesses can raise prices. They can grow earnings. Over long periods, quality companies outpace inflation. That's why we invest in businesses, not cash. Taxation. The UK tax system will take its share. Capital gains tax, dividend tax, inheritance tax. Every time your investments generate income or you realize a gain, HMRC wants a cut. This is why tax-advantaged accounts matter. ISAs, pensions, any vehicle that shields your returns from taxation should be used to full advantage. 10,000 pounds invested in an ISA compounds tax-free. The same 10,000 pounds in a regular account faces annual taxation that dramatically reduces your final wealth. The difference over 50 years can be hundreds of thousands of pounds. Use every legal advantage the system provides. Life. Cars break down, roofs leak, medical emergencies happen. Children need education. Parents need care. Life will present you with reasons to interrupt your compounding. Some of those reasons will be legitimate. Others will be excuses. Your job is to tell the difference. That's why emergency funds matter. Before you invest a pound, you need 6 months of expenses in cash. Because the worst thing you can do is be forced to sell investments at a loss because you didn't plan for normal life events. Yourself. I've said it before, but it bears repeating. You are the biggest risk to your own wealth. Your emotions. Your impatience. Your desire to feel smart. Your envy of others. No amount of arithmetic can save you from yourself. If you don't master your psychology, you'll find a way to sabotage the strategy. You'll sell during crashes. You'll chase during booms. You'll trade when you should hold. The people who successfully turn 10,000 pounds into 1 million pounds aren't smarter than everyone else. They're not luckier. They're just better at controlling themselves. The markets will crash multiple times. 20%, 30%, even 50% declines will happen. It's not a question of if, but when. And when they do, everything I've taught you will be tested. Your 100,000 pounds will become 50,000 pounds. Your 500,000 pounds will become 250,000 pounds. On paper, you'll have lost years of progress in months. But here's the thing. If you've invested in quality businesses, you haven't actually lost anything. The businesses are still operating. They're still earning. The only thing that's changed is the price other people are willing to pay for them today. If you sell during the panic, you turn a temporary paper loss into a permanent real loss. If you hold, better yet, if you buy more, you'll look back on the crash as the moment that accelerated your wealth. Every market crash is a transfer of wealth from the emotional to the rational. Make sure you're on the right side of that transfer. Lack of discipline. Here's the uncomfortable truth. Most people won't make it. Not because the arithmetic doesn't work, but because they don't have the discipline to follow it. They'll start strong. They'll invest their 10,000 pounds. They'll be patient for a year, maybe two. Then life will happen. Or boredom will set in. Or fear will strike. And they'll deviate from the plan. They'll sell, they'll trade, they'll chase, they'll convince themselves that just this once they know better. And that just this once will cost them everything. The path from 10,000 pounds to 1 million pounds is simple. But simple doesn't mean easy. If it were easy, everyone would be a millionaire. When you start with 10,000 pounds and commit to turning it into 1 million pounds, you're not just pursuing money, you're buying something far more valuable. Freedom. Freedom from financial anxiety, freedom from bad employers, freedom to say no to people in situations that don't serve you. Freedom to spend your time however you choose. But that freedom has a price, and the price is decades of discipline. You'll watch your peers buy new cars while you drive your old one. They'll post holiday photos while you stay home. They'll upgrade their houses while you remain in your modest flat. And every single time, you'll feel the pull to join them. Don't. Because what they're buying is temporary pleasure. What you're building is permanent freedom. They're working for possessions. You're working for independence. I learned this during the Depression. I watched families who lived beyond their means lose everything. Meanwhile, the frugal, the patient, the disciplined, they survived. Some even prospered. Not because they earned more, but because they needed less. Your 10,000 pounds growing into 1 million pounds isn't just about the money. It's about who you become in the process. You become someone who can delay gratification, who can ignore social pressure, who can think independently while everyone else follows the herd. These character traits are worth more than the 1 million pounds. Because character determines what you do with the money once you have it. Fools get windfalls and blow them. Disciplined people build wealth and keep it. Every pound you save instead of spend is a vote for your future freedom. Every investment you hold instead of sell is a statement that you value long-term independence over short-term excitement. The journey from 10,000 pounds to 1 million pounds will take decades. But those decades are going to pass whether you invest or not. The only question is whether you'll reach the end wealthy or wondering what might have been. I'm in my 90s now. I can tell you with absolute certainty that time passes quickly. The 50 years that seem impossibly long when you're 30 fly by. And the only thing you'll regret is not starting sooner. So what's the price of freedom? It's saying no to immediate gratification repeatedly for decades. It's enduring boredom while others seek excitement. It's being mocked by some and ignored by others because you're not living the flashy life they think success looks like. But here's what I've learned. When you're old, nobody cares about the car you drove in your 30s or the holidays you took in your 40s. What matters is whether you're financially independent or financially desperate. The people who chose temporary pleasure over permanent freedom end up dependent. Dependent on jobs they hate, governments they don't trust, children they don't want to burden. They have no margin, no options, no peace of mind. The people who paid the price of discipline end up free. They can be generous. They can take risks others can't afford. They can help their children and grandchildren. They can sleep at night without financial anxiety. That's what you're really buying with your 10,000 pounds and your decades of patience, not a number in a bank account. But the ability to live life on your terms, is it worth it? Only you can answer that. But I can tell you this, I've never met anyone who achieved financial independence and regretted the discipline it required. But I've met thousands who frittered away their earning years and deeply regretted their lack of it. The price of freedom is discipline. The price of dependence is impulse. Choose wisely. So we've reached the end. I've shown you the arithmetic, the strategy, the psychology, and the price. Now comes the only question that matters. Will you actually do it? Most won't. They'll hear these words, nod along, maybe even feel inspired for a few days. Then life will happen. The resolve will fade, and they'll go back to doing what everyone else does. Spending what they earn, chasing excitement, and wondering why wealth keeps eluding them. A small minority will actually start. They'll invest their 10,000 pounds. They'll feel proud of themselves for taking action. But within a year or two, most of them will quit. The returns will feel too slow. The sacrifice will feel too hard. They'll convince themselves they're being smart by taking profits or waiting for a better entry point. They'll miss the entire point. Time in the market beats timing the market. Always has. Always will. An even smaller group will persist for 5 or 10 years. They'll build discipline. They'll see the compounding start to work. But many of them will stumble just as success becomes inevitable. They'll get confident and make one big mistake, or they'll get scared during a crash and sell at the bottom, or they'll simply get bored and abandon a winning strategy for something more exciting. The tiny fraction who actually make it, who turn their 10,000 pounds into 1 million pounds, won't be smarter than everyone else. They won't be luckier. They'll just be more disciplined, more patient, more willing to endure decades of boredom for a lifetime of freedom. Here's what I want you to understand. The path I've shown you is simple, but it's not easy. If it were easy, everyone would do it. The difficulty isn't intellectual, it's emotional. Can you delay gratification for decades? Can you ignore social pressure? Can you stay rational during crashes and booms? Most people can't. That's not an insult, it's human nature. We're not built for long-term thinking. We're built for immediate rewards and quick reactions. Turning 10,000 pounds into 1 million pounds requires you to override your instincts consistently for half a century. But here's the beautiful thing. You don't need to be exceptional to do this. You just need to be willing to be boring, to be patient, to be disciplined. Those aren't rare talents. They're choices. Choices you make every single day. I built my fortune through these principles. Not because I was brilliant, but because I was consistent. Not because I had advantages others didn't, but because I could sit still while they couldn't. You have everything you need to turn 10,000 pounds into 1 million pounds. You have the arithmetic. You have the strategy. You have the understanding. The only question is whether you have the character. And character isn't something you're born with. It's something you build through repeated decisions. Every time you save instead of spend, you're building character. Every time you hold instead of sell, you're building character. Every time you say no to excitement in favor of endurance, you're building character. The 1 million pounds is just the scorecard. The real wealth is who you become in pursuit of it. So here's my final advice. Start today. Invest your 10,000 pounds. Add to it whenever you can. Hold through the crashes and the booms. Ignore the noise. Master your emotions. And don't interrupt the compounding. Do that for long enough and arithmetic guarantees you'll succeed. Not because I say so, but because mathematics doesn't lie. The path from 10,000 pounds to 1 million pounds is clear. The question is, will you walk it? Because in the end, the 1 million pounds isn't hard to get. It's hard to wait for. And most people would rather have excitement now than freedom later. Don't be most people.